Welcome to Co-Pilot Podcasts. You know that feeling when you buy lottery tickets and they all expire worthless? Well, that's exactly what options market makers want. Today, we're diving into the fascinating world of max pain theory, where your options losses might actually be predictable. We'll explore how this controversial theory works, what the research really says, and whether you can use it to your advantage.
And it's not just a theory anymore. We've got 25 years of data showing some pretty interesting patterns.
So what exactly is max pain theory? Break it down for us.
Well, at its core, max pain theory suggests that as options expiration approaches, the price of a stock tends to move toward the strike price where the most options expire worthless.
Wait, so you're saying the market somehow gravitates toward a price that causes the maximum loss for option buyers?
Exactly. Think about it. About 30% of options expire worthless, and another 60% get closed out before expiration. Only about 10% actually get exercised.
Those are some pretty striking numbers.
And here's where it gets really interesting. A major study analyzed 25 years of U.S. stock and options data. We're talking thousands of stocks across NYSE, AMEX, and NASDAQ.
What did they find?
They found that if you bought stocks expected to rise based on max pain and shorted those expected to fall, you could make about 0.4% weekly returns.
That doesn't sound like much.
But that's actually huge in trading terms. Think about it. That's roughly 20% annually, and it was statistically significant even after accounting for other market factors.
Okay, now you've got my attention. But how exactly does this work in practice?
So the calculation involves looking at all open interest for both calls and puts across all strike prices for a particular expiration date.
Open interest being the number of active option contracts, right?
Right. Then you calculate where the maximum pain point would be. That's the price where the combined value of all in-the-money puts and calls would be minimized.
Can you give us a concrete example?
Sure. Let's look at Tesla. OptionCharts data showed that on August 29, 2025, Tesla closed at 33388, while the max pain level for the next week's expiry was $340.
And did it move toward that price?
That's the interesting part. Tesla often does trade within a narrow margin of its max pain price as expiration approaches. But here's the key, it's not guaranteed.
So it's not some magical price predictor?
No, and this is crucial to understand. According to multiple studies, max pain is most accurate in calm, liquid markets during expiry week.
What about in other conditions?
That's where it gets tricky. The effect is much weaker during high volatility, major news events, or strong market trends.
You mentioned earlier that this works in crypto markets too?
Yes, but with some important differences. Crypto options markets are more fragmented and volatile.
How does that affect the max pain effect?
Well, studies show that in crypto, the effect is strongest during major expiry events. For example, there was a $13.8 billion Bitcoin option expiry in May 2025.
That's a massive amount.
And during these big expiries, we've seen price swings of up to 12% in the days before expiration, often moving toward the max pain price.
But I have to ask, isn't this just market manipulation by big players?
That's actually a common misconception. The research suggests it's more about natural market mechanics and hedging behavior by market makers.
Can you explain that a bit more?
Market makers are usually the ones selling options. As expiration approaches, their hedging activities can naturally push prices toward these max pain levels.
So it's more of a side effect than intentional manipulation?
Exactly. And here's something surprising. The effect is actually strongest in smaller, less liquid stocks.
That seems counterintuitive. Why would that be?
Because in smaller stocks, the hedging activity has a bigger impact on price movement. In large, liquid stocks, there are too many other factors at play.
How accurate is max pain as a predictor?
According to studies by OptionCharts and Strike.money, max pain aligns with the final expiry price about 60 to 70% of the time in stable markets.
Those are pretty good odds.
But remember, that's only under specific conditions. The accuracy drops significantly during volatile periods or when there's major news.
So how can traders actually use this information?
The most common strategy is to sell out-of-the-money options near expiration, targeting strikes near the max pain level.
But that sounds risky.
It can be. That's why smart traders use max pain as just one tool among many, not as their sole decision maker.
What other tools do they combine it with?
Technical analysis, volume patterns, and especially something called delta and gamma exposure, these help provide a more complete picture.
Are there any tools that make this easier for retail traders?
Yes, platforms like OptionCharts and TradingView now offer max pain indicators and visualization tools.
That must make it more accessible.
True, but there's a catch. The data these tools use is often delayed, at least by end of day.
So what's the future look like for max pain theory?
It's actually getting more interesting. Researchers are now using machine learning to combine max pain with other market indicators.
And that's improving the accuracy?
Yes, especially in predicting price movements during volatile periods where traditional max pain analysis falls short.
This has been fascinating. Any final thoughts for our listeners?
Max pain isn't a crystal ball, but it's a valuable tool when used correctly. Just remember, the market isn't out to cause pain, it's just a natural result of how options work.
And sometimes understanding that pain can lead to profit.
Exactly. The key is knowing when to pay attention to max pain and when to look elsewhere.
Well, that brings us to the end of today's episode of Copilot Podcasts. Remember, in the options market, sometimes maximum pain can mean maximum gain if you know what to look for.